following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in St. Petersburg, Florida. Tom's going to join us right after the first break. Starting the trading day off, we got markets in negative territory. Dow Jones negative 105 points, trading at 23,774. S&P is currently negative by 15, trading at 2569. The Nasdaq negative by 60 points, trading at 6896. The story out there this morning is retailers, and quite a number. Macy's down 18.6% on their earnings number. You had Kohl's as well, down about 9%. You also had Target coming out with 5.7% same-store sales. They pop a bit higher, but they get dragged down with the rest of the retailers this morning, down about 4.9%, trading at 66.84. Talking about action in the market. Let's jump over to our man Kevin Hinks from TD Ameritrade Thinkorswim. Every day, folks, right here, right after our program, 11 a.m. live, fast market from Chicago. And man, they got a lot to talk about this morning. Kevin Hinks, good morning.
Good morning, Tommy. You're exactly right. A lot going on. And Tommy, you just made a really good point as you came on the air. Target put up great numbers and is getting dragged down with the rest of this sector, as is stores like, brands like Lululemon and some of these other ones. And, in what was a really good holiday shopping season, guess what? There's going to be winners and losers.
Yes.
And clearly Macy's has come out as someone who did not overachieve during this period. That being said, Target put up numbers that are outstanding, and that is the opportunity that may lie within this trading day, is picking out the stocks that did well during the holiday season but are getting dragged down by the entire sector going down.
I had to do a double take, Kevin. I pulled up the Target chart, and I hadn't looked at it yet this morning, and all I'd been hearing about was 5.7% same-store sales. And I said, wait a second, am I confusing the equities for a moment? And I said, man, they're just taking it to the chin with the rest of the sector,
right.
Which is pretty remarkable, man, for sure.
Yeah, and for to put up 5.7% increase
yes.
in same-store sales, these are numbers that these firms can be proud of, and at least today, at least for the morning, it's not enough.
And that was after 2017, I think it was 3.4%. So two mammoth numbers, an increase on such an increase as well. Target obviously doing well. Macy's not so much, man. What else? What else you got? Go ahead.
Lululemon down 4% as well. And I can tell you from personal knowledge, I was in a Lululemon over the holidays, and the line was out the door to check out.
Yes, and not cheap products in there, man. High price,
and that's high margin.
Premium, yes, high price, premium product to have those types of lines for sure. But that's, if you can't be, positive on a day where you come out with 5.7% same-store sales in a company like Target that's just doing mammoth numbers, that's a tough market, man. But we'll see.
Tommy, the question people have to ask themselves is this: is this funds? Is this ETFs? Right, retail ETFs and sector trading, taking stocks that are doing well down with the overall sector, and that's when people have to maybe become stock pickers here.
Yes. No, I would agree, man, because hearing those differentials between Macy's and then between Target this morning, I said, man, there's going to be winners and losers, and they're already, I feel like, separating the pack with those.
But it's fascinating, and retail is always extremely volatile sector to trade anyway, and you're seeing that today.
And everyone's trying to peg why exactly, right? And as far as the weather, whether it wasn't cold enough that everyone didn't flock to the mall, maybe they got to stay outside. I I think there's a lot going on to peg the exact variable there. But Macy's, man, struggling. And I think about it, Kevin, I actually did not really shop at Macy's this holiday season. I have a Macy's card, right? So I should be a customer that maybe makes their way into there, and not at all. And I'm a diehard Amazon, so some of that has to be relationship-wise to, related.
Personal note, Tommy, I was in a Macy's, and frankly, over the holidays, I was in a Macy's. It was unorganized.
I had been in the Macy's, right, but I didn't buy anything. Isn't that, and I kind of like meandered through, took a peek, maybe looked at a couple of things, and skipped around the mall. And looks like more people than they wanted did that. What else do you have going on today, Kevin? We have Powell's going to be making remarks later this afternoon. It's, of course, earnings season, a lot else going on there. What are you guys talking about for the program?
Jerome Powell talking at the Economic Club of Washington at 12:45 Eastern, 11:45 Chicago time. But think about this, Tommy. You've got Thomas Barkin, you've got James Bullard, you've got Charles Evans, you've got Neil Kashkari, you've got Richard Clarita, all speaking today, as well as Jerome Powell.
Pretty cool.
It's a very loud period for the Fed. They're all going to be talking about, remember, you had the minutes that came out yesterday afternoon that were, frankly, in my opinion, Tommy, they were more dovish than even the Fed alluded to. So I thought the minutes showed some real dovishness and unwillingness to go forward. And here's that word, Tommy, that we talked about, patience.
Yes.
I think you're dealing with a Fed now that really wants to be patient with rates. And that's why I think what you're seeing, that is now become, much more certain that we're in a pause for interest rates going forward. I think that's significant for this market.
The first word, I was doing the 2 o'clock update at the top of the hour yesterday as those Fed minutes came out, and the first word that one of the headlines coming across the Bloomberg was patience, and that's, exactly the market. I said the market's going to like that, and sure enough, they did. It was a good reaction. It's pretty much what people could expect, but that was one of the first headlines, and they put that out there pretty broadly. What I heard some commentary this morning I thought would be interesting. So, of course, there's trade fears across the market with China, and it's like if those trade fears subside, then does the Fed discussion come back rearing, into the conversation, which is just interesting, facing both of those headways and how we're in such a unique market that if you do too well, the Fed will creep back up, and that might be a headwind. We'll see.
Right, but here, if the Fed's doing their job properly, right, they're monitoring full employment and inflation. And if a deal does get struck with China, and obviously that would be extremely positive for the overall market.
Definitely.
But then that would produce new data that the Fed would have to analyze and make decisions on. Being data dependent means they would look at the data that would come out. Don't get ahead of a market, but analyze the data as you get it. And right now, Tommy, there is data showing little or no inflation in this market, and that's what I believe led the Fed to pause here.
Yeah, no, listen, it's gonna be a volatile year, I think, man. It's interesting. We had the VIX under 20 yesterday, and we have all of this action going on. But I would agree, the Fed, they're paused for a while because the numbers dictate that, man, and they were listening. And we'll see as we get the earnings and we shape the next few months, man, how this market shapes up. Kevin, we always appreciate the update, man. I'm sure lots to talk about today with the market and earnings season coming into full swing. We look forward to Fast Market coming up right after us.
Thanks for having me, Tommy. Have a great day.
Have a great one, man. Thanks so much. Folks, come on back. We'll be back in 3 minutes. Right now, we get the S&P's negative 16, NASDAQ minus 65, Dow minus 115. Tom and I coming right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow Industrials down 124, Nasdaq off 53, S&P's down 14, gold contract flat, $12.91.90. We got silver down 5 cents, $15.65 an ounce. Light sweet crude off 52 cents, $51.83 a barrel. Notes and bonds just continue higher. You get the 10-year note up 4 ticks, 121.27. 30-year up 5 at 145.23. King dollar's up 195 ticks at 94.985. King dollar got toasted and roasted yesterday, down on volume. I suspect you got a little dead cat bounce there. Euro's at 115.20 to $1 US. Yen is out here at 108 to $1 US. So, just heard you talking to Kevin Hinks. We just did a handoff. I was just on with him over in the TD network. He comes jumping right over here. It's a beautiful thing. Totally.
We had just a few things to talk about today, as I'm sure you guys did. What were you guys chatting about on
we were talking about the housing market.
Okay.
Toll Brothers, Lanark,
cool.
KB come out.
Yep.
Bottom line is that, and that's all about interest rates, folks. That's what it comes down to. You know, the lumber has got cut in half. So it's not, you know, price of lumber has gone from what, 643 per 1,000 square, 110 square feet. Let's see, lumber. I'll pull this up because it's pretty cool when you actually look at this. But if the interest rate stayed higher, it would be a problem. But
okay.
When you take a look at this lumber, you're going to see this is pretty dramatic, actually. But the housing stocks look to me like they started. Look at this. So it went from 659, and that is 110, I think, square. Yeah, 110,000 board feet.
Okay.
To cut in half. So you know, for these big builders, that's a big deal. That's a big deal.
I'm sure, right?
And it comes back to the rates, though. You know, what happened yesterday is that when Lanark came out with numbers, the numbers were light. And then on the conference call, the CEO is saying, yeah, the numbers were light, but guess what? The last 2 months, the amount of traction they've got is dramatic. And specifically, not just where we are here, southern Florida.
Okay.
Because of the affordability.
Sure.
They were getting hit in California because, you know, everything's $1 million.
Yes.
But this area here, they were getting traction.
Was there any reason why that lumber had such a decline on the aside from that?
I don't
just
know.
the markets
I really don't. You know, here,
that is quite a decline for something. If housing's rocking and rolling you know,
yeah,
general repair can be a million things you use the lumber for.
Now look at that. So Toll Brothers had gone from $52.
Okay.
You know, that topped out.
Okay.
You know,
it pulled back with a lot of those housing stocks.
It did.
As well.
So,
yeah.
And I suspect, you know, to me, this is just a pullback into strength, really. Do you know what I mean? So we'll see if that's how it shakes out. It didn't break its swing out here, going back to February of 2016. You know, we'll see who can get action topside.
It's pretty crazy they haven't gotten any action since 2012, though. Right? I mean, housing's come a long way since 2012 for their stock to be at almost the same price.
Yes.
As 2012.
Right. And if you look at the numbers, now what has happened here, this is Toll Brothers. The numbers are good, though. But the same thing, you know, they went from $4.2 billion in 2015, 7.3.
Yeah.
You can see they made the numbers.
Yes.
You know, but bottom line, the stock, same deal. Lennar, look at this one. Now, Lennar's numbers, they had bought so many people.
Okay.
That you're going to see this revenue expand. Look at this, 9.5 to 22.
Yeah.
But they bought two different companies.
Sure.
They, you know, that expanded that in a dramatic way. There's no doubt about that. And this, you know, it's the interest rate here is going to be a big deal. And listen, they keep buying bonds. You know, if we go take a look at the dollar index for a second. Now, the dollar yesterday got toasted, and let's see, you have 11,000 contracts. So yesterday, I believe we did 26,000, 29,000. So 29,000 down. The number to keep your eye on here, folks, is going to be 195. And what that is that when the dollar came down yesterday, you know, it was forceful on the way down. It almost went down a full penny. It went down 900 ticks from the highs to the lows.
Yes.
It's in a lower range now. And the reason that's why I'm saying the 95-200, you know. We'll see whether it stays down there. It's the first time since October 24th that it dipped below it and then pops right above it again.
Yeah.
You know, and if we do look at the euro, you're going to see the euro broke topside yesterday. That's a decisive break. So it went to a higher high today. It's pulling back, but still not under the range.
Yes.
And it's going to be this pound, man. You know.
So we have a vote coming up, which is probably going to fail.
Yeah.
Right. And then they may try and oust May.
Yes. Right. And then Corbyn, who, bottom line is that that's who would probably be in, he turned around this morning and he says that, well, he's still going to basically stay with the aspect of leaving.
Okay.
When his party, though, bottom line, doesn't want to leave. And so it's going to be intriguing in the aspect. He's just saying he'd keep it status quo at this point to finish through the negotiation, you know. But the closer we get, I mean, the bottom line, it looks like that, hey, guess what? This thing's going to get pushed off.
Yeah, so it's January 15th, which is that Tuesday.
Yeah.
Is the day of the vote planned for. The UK bonds rise to disappointing retail sales data. Yeah, that's not Brexit. I just wanted to see. Yeah, so the EU is waiting to see the scale of her expected parliamentary defeat before considering its response. And you have the Labour spokesman said a delay in Brexit may be necessary to avoid chaos. Lots going on.
They're setting up the delay right now. You can,
yeah, no,
yeah.
Listen,
I mean.
There we go. And then Labour Party leader Corbyn will make a Brexit speech later Wednesday calling for a general election if May loses the vote next week. That's that's a big one, though.
Oh, yeah. Oh, yeah. No doubt, man. Yeah.
And then, so May is meeting with Japanese Prime Minister Shinzo Abe.
Yeah.
Maybe he'll help her solve.
She needs all the help she can get, man. She needs all the help she can get. There's no doubt about that.
It's quite a spot she's in, to be fair to her, because they voted for it, and now there's a battle over whether they want it, right? That's a tough one to navigate politically, of course.
Well, that's what the politicians are saying.
Right.
That's what's going to get intriguing, you know.
Right.
And, hey, we'll see where this shakes out. You know, as a democracy, it's kind of interesting. You vote for it, then they can't pull it off. Well, you're gonna vote again.
I agree.
Hey, then you can't pull it off. Hey, you got to vote again.
Yeah.
Oh, really?
That's not how things are supposed to work.
No,
I agree.
it does.
That's why votes have consequences.
Right.
I think America should know that too.
Yeah, big time.
Yeah.
Slightly. Oh my God.
So retail, right? How about Bed Bath & Beyond, man?
Yeah.
The one lone star, which we've talked about many times, how they are competing. And they have lost steam, but they were up as much as 24%, and after their numbers. And maybe if we could jump over to their stock and see, because they've given back a decent amount of those gains, I guess.
Yeah. So you're up as high as 1356.
It might have even been higher pre-market.
Yeah, that's what must have happened.
Well,
exactly.
let me just as you jump, can I pull to?
Yeah, totally.
Jump over to that Thinkorswim platform. Yeah.
Oh yeah, look at that.
Just a bit.
Yeah.
15.19, right, when they announced last night.
Yeah, big number.
And basically the whole night just straight to the floor.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right back, folks. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Thursday, natural gas. Let's see where we're shaking here. The stockpiles fell 91.
91 billion cubic feet. Estimate looks like was a decline of about 71. So a little bit less natural gas than the market thought. We should get a spike in the price. Jump over here and get into the commodities. Pull up that natural gas contract. So we're looking at the February contract. And yeah, you got a little bit less natural gas than the market thought. Going to be a little bit pricier. We jumped from 302 up to 305. We were up as high as about 3085 early this morning. Good old natural gas. Let's put this on a
seriously
daily for a second. It's been quite a little tame moment coming into 2019, though. Look at that, compared to 380. This is a daily I just put on there, but you can see today's day shaping up, putting it back on a 5-minute.
And we can tell from talking to all these folks in the Midwest and Chicago, they're freezing out there, man.
Yeah, they are. And by Florida standards, we have some cool weather here as well. So maybe cold across the country, man.
Let's take a look at the retailers got smoked, getting smoked. Macy's, what's that, down 10%?
No, it's like
20%. Yeah. So Macy's, let's take a look. Is it going to be an ABC down? It looks like it's going to be, yeah. So A point is 35, B's 20, let's call it 28. So we got, $7? That'll get you 24. Let's almost hit it. And that's off Kohl's numbers.
No, it's off their numbers, too.
Oh, it is?
Oh, yes.
Oh, those poor people. Okay.
Yeah.
I thought I did pretty good. I shopped at
Did
Macy's.
you? I mentioned to Kevin Hinks that I actually did not. I made it through a Macy's at one point, but I don't think I spent a dime there, which I have a Macy's card.
Okay.
So, I usually, not usually, but occasionally during the holidays, I will, so they didn't get me. So, Amazon got me, for sure.
Yeah.
And a few retailers, but Macy's didn't.
And KSS, Kohl's. So that's not even that bad. It's down almost 10%. But what you're doing here, folks, this is where it's going to get interesting. So, Kohl's is going against its strength, came off that bottom of December 26th, and that was, of course, Powell's Day. Yeah, I would say that, it was like a Kohl's. This looks to me like it's trying to make a bottom in here.
Yeah.
I think a lot of these, there's going to be rough patches here, but it looks to me that these retailers that are basically alive, probably will stay alive. How about Eddie Lambert, right?
Yeah, makes sense, right? You go in with a low ball offer to start off the negotiations.
Right.
And I was just going to jump over to Macy's to see, quite a slide right on the numbers, right?
Oh, yeah.
And then Kohl's, same thing, except they've been slipping as well. But
oh, yeah, Target could hit too.
Target, man, Target. So 5.7% same-store sales. That's coming off of, for the year.
Yeah.
That's coming off of 3.4% the previous year. It's huge growth in the retail.
Yeah.
And you get smacked down like that because of literally just nothing but the rest of the market.
Right.
As traders are saying, I'm not buying Target today.
Yeah. Oh no, it's real. You know what I mean? Let's go take a look at this S&P in general. So let's look at the SPY first, because we had some nice volatility out here this morning. The low out here in the SPY is 255. You're at 257.24. Oh, you're filling the gap. Oh, this is going to be dangerous. Okay, so that's 257.29. That's what we're doing. That being said, though, that last bar, we just had some good volume on that. That's 1020. So we'll see whether it's going to be a fill of the gap or not. Let me put the futures up. Okay, so we get down. Yeah, we don't have a lot of volume at the bottom either. Yeah, this is going to be. There's the battle line right there. What's that number? 2580. That's the battle line. So what you have here, folks, is this. That's 10 minutes. That's 4 yesterday. That's the big volume spike on the way down. 81,000. That's going to be. That's the number you want to keep your eye on, folks. 2580, and we've hit 2581. We'll see how this shakes out. Powell, I guess, is speaking at 12:45.
Yes.
And with Powell now, my take on that is that the news is out.
Oh, I would agree.
Yeah.
And I think the market knows that. There's not like
Right.
hanging on his words.
Right.
He's said
Right.
what he needed to say, I think,
Right.
very clearly.
Yeah.
Yeah.
You know, let's go take a look at Apple. Yeah, Apple's still having a tough time, man. This is going to be pretty wild watching it all shake out. Oh, Tesla. Now we know what Larry Ellison owns, too. Tesla, he claims 1 billion. Was it one? Let me see. I wasn't quite sure it was 1 billion shares or 1 billion. No, it was a $1 billion investment, I believe. PHDC. Let's see.
There it is, number 11.
Oh, thank you.
3 million shares.
Oh, there it is.
And
Okay.
that would be about $1 billion.
Yeah.
So 3 million shares
Yep,
at
there you go.
$333
Right.
would be
Right.
so just over.
So
$1
you can
billion.
see he filed. Yeah,
Yeah.
he filed the 27th.
Yeah. So 1.75% of the company.
Big number, man.
Not bad. He doesn't even get 2% of the company for $1 billion. Yeah.
Oh man, I'm
Yeah.
telling you. Yeah, he has a few extra billion. There's no doubt
he's
about
he's
that.
okay, and that's
Yeah.
going to be a good investment, I think.
Yeah,
oops,
I
hit
agree,
the wrong
man.
button there, but I wanted to show. Let me jump over because there was another headline I saw this morning. That, and I hadn't gotten into this yet. I was going to get into it maybe if I had
Oh.
time. Tesla to stop. Well, now this is just a tweet, so
Okay.
so take it for what it's worth. Unfortunately, you have to say that with Elon, but they're going to stop selling the lowest price versions of the Model S and X, which are their premium
Yeah.
vehicles, right?
Monday.
Yeah. And so I don't know how that plays out at all. I don't know, higher end versions of both models will still be made and sold by Tesla, but they're going to cut out, I guess, the lower end version of their premium vehicles. Still premium. I mean, some of these starting at prices for the X and the S are premium products already. So I guess they're just really ramping it up to force people, if you're in the middle,
Oh yeah.
to go down to the Model 3, because that's what they need to do. You know,
Right.
they don't want you to get a bare bones version of the S or the X.
Right.
They want you to get a Model 3
Right.
and maybe up it a bit because they want the Model 3 is their future.
It's pretty cool what he's doing, meaning controlling that market. You know,
Yeah.
because that's what it seems like he's doing right there.
So
And,
they
you know,
thought, yeah,
if,
right.
And if you like a Tesla, that makes sense. That's pricing power.
Yeah,
Right.
yeah. They want a vast discrepancy to make sure that if you're on the fence, you're going to be on the Model 3 because
Right.
they need those numbers. So I guess they're going to stop taking orders on the 75 kilowatt version of the Model S and X. Please order by Sunday night at Tesla.com.
He's a good salesman.
That is a good salesman.
That's awesome.
Hey, my lease is up in April. Maybe I'll go take a look at one of those vehicles. And
listen,
I got about 3 months, right?
I know,
got
and
February,
that's
March,
nothing.
April. It's nothing, right?
That's nothing, man.
It wouldn't be the end of the world if I got a good enough deal. So here we go. Higher end versions of the S and X equipped with the 100 kilowatt hour battery will still be made and sold, but at a higher price. Following the changes announced by Musk, the starting price for the new S is $94
Ooh.
and the X is $97.
Whoa. That's money, man. Holy cow.
I think they're already a little expensive for what I was going to go for, but that's way out of the park. So I better take a look at that
that's a
75
big
because I
number.
bet the 75 kilowatt is fine for the driving that I do.
Right.
So that would probably be the one.
Right.
I think maybe.
Wow. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 52, Nasdaq off 19, S&P's off 5.5. Come right back. Can you see that? Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials down 42, Nasdaq off 14, S&P's down 5. Let's go over to our man, Mr. Jack Gleason, as we do each and every Thursday at 40 past the hour. You can reach Jack every trading day, folks, at MajorLeagueTrading.com. Jack is coming to us live from beautiful Costa Rica.
Gotta love it.
Jack Gleason, what's going on, brother?
What's going on, guys?
Look at you.
Another beautiful day in paradise over here with pretty active markets. Man, since I saw you guys last, what a rally we had on that Friday to follow that up. And today, I sent over you 3 charts. I got the S&P, gold, and oil. And I decided to take them out on the higher time frame. So, you know, these charts could still be in play by next week. Normally, I've been sending you guys charts and they're on the smaller time frame, and it's like those trades are either shifting because we're making new highs or lows. So I decided to pull out on the time frame here and show you guys a couple of trades that I'm looking at. So tell me where you want to begin, and we'll start shooting it off.
How about the S&P? We got your charts. We got the S&P up there.
Okay, cool. So that S&P high to high draw. This is really where I'm paying attention to. We have completed. On that initial rally pullback that we had out of basically, the Christmas Eve lows, we've completed a negative 61% Fibonacci upside target at 2583, and we saw that yesterday. There was a little bit of a resistance. So I'm looking at a high-to-high sequence here, which is the beginning of that day's high, and there's 2 levels I'm going to watch that are going to be really important. I'd like to see them trade today. I do think we're going to have a little bit more of a choppy market here today. You know, it's been up like 3 days, 4 days in a row now. I want to see a pullback down into 2 different levels. We have 25.5275, which would be a 38% retracement of that the high of the day when we first started the rally, and then the 50% retracement is really a solid level that I'm looking for, and that's 25.39. That is one of those trades where you see a lot of people kind of get faked out to the downside, and if we do end up trading that level, that my target on that level coincidentally lines up with the full 50% retracement short, which is a level that we need to be aware of if we continue to rally. That level is up at 26.25. So that is from the 2017 high back in 2018 high back in September. To the low, that 50% retracement we're going to want to watch. That level is 25 or 26.
Yeah, no, I can see that for sure. Yeah, so pretty cool. I mean, we got a two-sided market. There's no doubt about that, man.
Yeah, absolutely. Everywhere, man. It's awesome. I'm loving this market.
Oh, it's wild, man. So we got gold up there. Speaking of runs, man, lots of action on this gold chart. Talk to us about this one.
Yeah, so I want to talk about really here. So the negative 61, so that's 1292.9 plus 1293 freezing math. We carried back the November. We completed that profit target, and we were kind of 18 sideways up
Surf's
here.
getting in the way.
Yeah, unfortunately, you're
Jack.
breaking up a little bit, Jack. We're struggling to get you on this one.
Oh, okay. Are you?
Yeah.
Yeah.
Maybe we can just try and reconnect if you want to real quick on our producers, because unfortunately we can't.
Yeah, just try to reconnect. Let's do that. There we go.
Perfect. I want to see what's going on in that gold chart, man. He's got a lot of good levels over there. Let's check back to natural gas real quick, maybe while they try and get Jack back on the line. And how about actually Bitcoin? We were taking a look at this during the break, man. So 1:30 in the morning last night, we dropped from over 4,000 down to 3,750. You're talking about almost $300 when Bitcoin is only trading at 4,000. Quite a move. And I think we got Jack back. Let's jump to him.
Yeah, hopefully you guys can hear me.
Loud and clear.
Yes, sir.
Perfect.
All right, yeah, I got two connections. I just switched my other one. The internet's been a little shaky lately, unfortunately. But yeah, back to gold. So we've been sitting on this, negative 61.8% profit target. Now, if we hold the low that we have so far this year, my next target is going to be 1313.
Okay.
If it breaks, my next support is 1273. So it's going to be one of those two situations where they're going to take out the low, trade down to 1273, or continue up with the strength that we've seen, and then rotate up the 1313 profit target there for gold.
Nice. And the dollar, of course, that had a large move downtown yesterday, which is what gold's all about. That's so. Next, what do we have next here?
Oil, baby.
Okay, oil. Talk to us about oil.
Yeah, nice big reversal. Good. I mean, it's kind of been trading like the S&P has. So this is a more zoomed in chart, so you can see really where I'm drawing these Fibonacci's, where there's a little more detail here. The hourly highs of that reversal day that we had, I'm looking at that high drawn to the current high. And this actually held earlier in this week. Going into Monday, we were holding the same sequence, and it's fully hit all of its profit targets at this point. The two levels I'm looking for below, 50.45 and 49.75. I really like 49.75 because it lines up with that previous high that we broke out of.
Yeah, I can see that, right.
Yeah, so those I got my alerts there. I'm going to be looking for some swing trade setups. But I do think oil's finally made, in all of that move down that we made in oil, it's going to be pretty easy to, once that trend flips, oil's, the true commodity. It's like, the thing just runs. It's been running for a long time. It runs bulls, it runs bears, and it's a great trending market.
Nice.
Pretty wild that we're up from $43 trading at 52. You're talking about $9, 20% in a commodity like oil that's just a mammoth across the globe, man.
And do the other side of it, October 2nd, it was
craziness.
At 76.
I agree. The moves just mind blowing, man.
Oh man,
Seriously.
you gotta love it. You gotta love it. Hey, so we've been talking to your compadres in Chicago, and you're really happy that you're not there because everyone.
It's a little chilly over there right now.
They're telling us, man, how cold it is, Jack.
Oh man, it's funny. I get on here, I'm like, should I dress a little more appropriate? But it's just too hot. I walked down to the beach this morning about 6 a.m. and took a little stroll. But yeah, I'm very glad I'm here. I need to kick the air conditioning on here real soon because it's about 80 degrees outside right now.
Yeah, well, we're Floridians, man, coming from Boston, so we can relate to it for sure.
Totally. Well, listen, man, you have a great week, safe week, and of course, we look forward to speaking to you next Thursday, Jack.
You too, guys. Take care, and thanks for having me on.
Thanks for the update, man.
And you can check out Jack, folks, at MajorLeagueTrading.com. Market-wise out here, bottom line, you almost got a flat market. You know, Dow's down 3, Dow's down 30, Nasdaq is down 11, S&Ps are down 3.
Gotten quite a little pop from those lows.
Yeah. You know, if we go, let's just go overseas for a second, see what we have happening there. So Europe right now, you know, bottom line, mixed market. You get the FTSE up 0.2%. DAX is flat. CAT's down 0.4%.
Just to put in, so that's the last full year. Year to date, there's going to be big numbers, man, when you look at it and then put it in dollars, of course. Quite a start to the year for our markets and across the board. You know, just quite a pop in the first few trading days.
Yeah, you
get Nasdaq up almost 5%.
Nasdaq's an animal. Isn't it is. It is. It really is. It's pretty amazing. Our phone number is 877-927-6648. We have the Dow Industrials down 15, Nasdaq off 6, S&P's down 2. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 14, Nasdaq off 1, S&P's off 1.5. And as you come over to our website at TFNN, folks, you're going to see right in the featured content here, our man, Mr. Dave White. He is going to be doing a webinar for his subscribers of the Path of Least Resistance as well as the Tech Insider.
You got
This
it.
is going to be January 16th.
That's right, a week from yesterday. Yeah, so Wednesday night.
Oh my God, January 16th is a week from yesterday.
It's almost February. No, we got time. It's January 10th, right? January 10th today. We're okay. January 16th, nuclear weapons for traders. So David done one workshop prior. This workshop, not like an extension of that. You don't need to have gone to that. It's just kind of like the nuclear weapons for traders that he's using within his newsletter. He's going to talk about extensive coverage and insight first of the year of the sector oscillators, which he really breaks down. So he breaks down 24 sectors by ETF in the Path of Least Resistance every day for subscribers. So you'll automatically gain access to that, of course. You sign up for Path of Least Resistance. And
it's about machine learning, folks, okay? What he's put together is a couple programs.
Yes, that kind of like are putting out those charts, right?
Yes.
Or digesting what's going on in those charts for trading. And so he's going to break down kind of what he's using in there. You can click here and get a little bit more information if you just scroll down in terms of what he's talking about there. He's also going to be showing the proof that they can see the volatility forecasted in the charts, how to adjust risk versus reward, and where we are in the cycle shown by the sector oscillator charts. So he's going to do a deep dive in how the various sectors look for this year, 2019, and taking a look at the scientific look at candlesticks and see why there's statistically 25 candlesticks that make up every pattern in those markets. Should be a great workshop. That is Wednesday coming up. Check it out, Path of Least Resistance. And it's great where you can get into the newsletter, see all the charts, and then get the whole workshop in there, archive, the whole deal.
Yeah. You stay right there, folks. We got Fast Market coming up next. And, of course, we got our man, Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, Bill.
Thanks, Ben.
Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.